Back. Is the AI market in a bubble? That's what OpenAI CEO Sam Altman is warning, saying over the weekend, investors are, quote, overexcited about the AI trade. Joining me here, Post 9, is star Wedbush analyst Dan Ives. He is as excited as his coat is bright, right? I mean, is Altman onto something or no?
Look, I mean, I believe we're only in the second inning of a 9-inning game. I mean, because it's our view on the enterprise side, it's just started to play out from use cases. I think as we go into the consumer and ultimately what's going to be autonomous and really the derivatives, I mean, Scott, it's my view the next 2-3 years, we have a tech bull market, and I think AI revolution, the actual impact over the medium and long term is actually being underestimated.
Is he doing a Greenspan here where he sort of waves the flag, but we don't see the results of the hurricane until years down the road?
Yeah, I think it comes, look, and Altman obviously being the golden child that we see when it comes to AI, I think what he's talking about, there could be some froth at stages or parts of this.
Could be.
But, well, especially when you talk about some of the valuations on some, maybe on the private side, what I see on the public side, I see ultimately demand that's 30 to 40% more than I saw it 3-4 months ago. I see a CapEx, ultimately really a transformational CapEx that I view as a fourth industrial revolution.
There's no question about a transformational CapEx. Does the return on the CapEx meet the moment or not? That's what we're all going to be boiled down to. We have built in assumptions. You and every investor who's buying these stocks have done that. It has to result in something where you get a moment like Dan Greenhouse was talking about when the bottom eventually fell out in 2000.
Yeah, and I think what Dan's talking about, and to me, the last quarter and what we're seeing out there in terms of earnings, it's actually been a validation moment for AI. And it's our view that when we look out over the next 12, 18 months, I think as you look at the second, third derivatives across software, cybersecurity, autonomous, I believe investors are actually underestimating where we believe, look, it speaks to our view where this tech market's going. And I get the skepticism, but they'll continue to prove it wrong, I think quarter after quarter.
The stock of NVIDIA has recovered from its lows earlier this year, and as earnings are revealed, expectations are extremely high. Despite increased competition, NVIDIA is still in a strong position to take advantage of several new infrastructural opportunities. When compared to earlier prices during the artificial intelligence, AI revolution, NVIDIA's stock is still reasonably valued. Companies from every industry have been releasing their second calendar quarter 2025 financial earnings and operations results over the last few weeks. Big tech was the focus of many investors' attention. These giants' spending trends reveal more than just the state of the macroeconomic environment as a whole. They also provide insight into the most closely followed market trend, artificial intelligence, AI. The leading industry bellwether, NVIDIA, has not yet stepped up to the plate, despite the fact that the majority of AI's major companies have already reported. Expectations are extremely high for the semiconductor giant's results announcement on August 27th. Let's examine how NVIDIA stock usually responds to earnings season and determine if this is the right moment for investors to take advantage of the chance. NVIDIA's price movement over the last 3 years is depicted in the chart below, where earnings dates are indicated by purple E markers. Every results announcement, with the exception of one, has been followed by a spike in buying activity, highlighting the market's relentless desire for NVIDIA stock. The only exception occurred earlier this year, when NVIDIA's prognosis was called into question due to uncertainty around President Donald Trump's new trade plan and worries about competition from Chinese models, including DeepSeek. These concerns fed a cautious narrative that momentarily halted the business's otherwise strong momentum. However, as recent patterns demonstrate, those anxieties have mostly subsided and have been replaced by fresh investor zeal. The general conclusion is clear. NVIDIA has emerged as a notable victor in recent years, as evidenced by the rise in its share price in tandem with the development of AI. During NVIDIA's earnings call, what should investors be watching for? The primary driver of NVIDIA's revenue throughout the AI boom has been the extraordinary demand for its CUDA software system and graphics processing units, GPUs. I still see a number of strong catalysts that might support NVIDIA's long-term growth, even in the face of growing competition in the GPU market from advanced micro devices and Broadcom's impending release of custom ASICs. Investors were informed earlier this year that Alphabet and Meta platforms want to greatly increase their AI capital expenditure (CapEx) budgets. Meta launched a new venture called Meta Superintelligence Labs, MSL, and invested $14.3 billion in Scale AI. Alphabet, meanwhile, keeps increasing its expenditures on servers and data center expansions, which are undoubtedly driving forces behind AI infrastructure. But they are not alone. Massive capital expenditure promises are also maintained by Amazon and Microsoft, bringing the four hyperscalers' combined spending on AI infrastructure this year to an estimated $340 billion. Leaders from Oracle, OpenAI, and SoftBank convened in the Oval Office shortly after President Trump took office in January to introduce Project Stargate, a historic $500 billion plan to expand AI infrastructure in the U.S. Middle Eastern nations, including the Kingdom of Saudi Arabia and the United Arab Emirates, have started their own Stargate-style initiatives, each with significant financial commitments. These initiatives are made possible by NVIDIA's industry-leading chipsets and data center capabilities, which act as the AI foundation. China has been NVIDIA's largest challenge for the majority of 2025. NVIDIA can now access this crucial market thanks to a recently drafted agreement with the U.S. government, which calls for the company to send 15% of its Chinese revenues back to Washington. Although the arrangement might seem expensive at first, NVIDIA is positioned to absorb this investment with little effect on profit margins due to its greater pricing power in the semiconductor industry. Because NVIDIA can offset these costs, doing business in China continues to benefit shareholders. As increasingly sophisticated AI use cases develop, a new wave of opportunity is opening up outside infrastructure. For instance, Tesla's efforts to expand its robotaxi business and its choice to switch from the company's Dojo system to one powered by NVIDIA highlight the company's crucial role in increasingly complex applications like driverless cars. In the meantime, NVIDIA CEO Jensen Huang believes that the market for AI-powered robotics applications might eventually be worth several trillions of dollars, and Tesla and other firms are vying for market share. Looking even further forward, the growing interest in quantum computing indicates that next-generation hardware and software are required, which motivates NVIDIA to keep coming up with new ideas to be at the forefront of the AI narrative. Throughout the AI revolution, NVIDIA's forward price-to-earnings, PE, multiple is tracked in the figure below. Even though the company's valuation has increased recently, shares are still cheaper than they were at previous forward earnings peaks. This implies that NVIDIA's stock price has not yet completely reflected the majority of the growth from the catalysts covered above. In other words, as these potential increase in support NVIDIA's expansion, there may be significant value upside in the future. Even if NVIDIA's 3-year leap has been generational, the company's long-term tailwinds suggest that the rally is still going strong. Attempting to time the ideal entry opportunity should not be the main emphasis for investors. Rather, purchasing the stock at various price points over time, a tactic called dollar-cost averaging, or DCA, remains a successful way to establish a stake in one of the key winners of the AI era. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. According to two people with knowledge of the situation, NVIDIA is working on a new AI processor for China that will be more potent than the H20 model it is currently permitted to sell there. It will be based on its most recent Blackwell architecture. Last Monday, U.S. President Donald Trump made it possible for China to sell more sophisticated NVIDIA processors. However, the sources pointed out that Washington's long-standing concerns about granting China excessive access to American artificial intelligence technologies make U.S. regulatory clearance far from certain. According to the sources, the new chip, which is speculatively referred to as the B30A, would have a single-die design that should provide half the raw processing power of NVIDIA's flagship B300 accelerator card's more complex dual-die setup. When an integrated circuit's primary components are constructed on a single, continuous silicon piece, as opposed to being divided across several dies, this is known as a single-die design. The new chip, which is based on the company's earlier Hopper design, would also contain high-bandwidth memory and NVIDIA's NVLink technology for quick data transfer between processors. According to unnamed insiders who were not authorized to speak to the media, NVIDIA plans to send samples to Chinese customers for testing as early as next month, even though the chip's specifications are still being finalized. In a statement, NVIDIA stated, "We assess a range of products for our roadmap in order to be ready to compete to the degree that governments permit." According to the statement, everything we provide is created exclusively for advantageous business use and has the complete consent of the relevant authorities. A request for comment from Reuters was not answered by the U.S. Department of Commerce. One of the main bones of contention in U.S.-Sino trade tensions is the degree to which China, which accounted for 13% of NVIDIA's sales in the most recent fiscal year, can obtain advanced AI chips. Only in July did NVIDIA get approval to resume selling the H20. After export limits were implemented in 2023, it was created especially for China. Nevertheless, in April, the company was abruptly told to cease sales. Following the announcement of an unusual agreement that will see NVIDIA and rival AMD provide the U.S. government 15% of the profits from sales of select advanced processors in China, Trump hinted last week that he might let NVIDIA to sell a scaled-down version of its next-generation chip in China. He added that the H20 was obsolete and implied that a new NVIDIA processor for China would have 30% to 50% off in regard to the chip's processing capability. Republicans and Democrats in the U.S. legislature have expressed concern that the country's attempts to stay at the forefront of artificial intelligence may be hampered by access to even smaller versions of flagship AI chips. However, NVIDIA and others contend that in order to prevent developers from entirely switching to products from competitors like Huawei, it is critical to maintain Chinese interest in its processors, which are compatible with NVIDIA's software tools. In terms of chip development, Huawei has made significant progress. According to analysts, its most recent models are comparable to NVIDIA in many areas, such as processing power, but fall short in others, like support for software ecosystems and memory bandwidth. In addition to complicating NVIDIA's attempts to maintain market share in China, authorities have warned Chinese tech companies against buying the H20 after Chinese state media in recent weeks claimed that the American company's chips might be security threats. Chips from NVIDIA are said to be backdoor-free. Two other individuals with knowledge of the preparations also claim that NVIDIA is getting ready to begin shipping a different new chip made specifically for China that is based on its Blackwell architecture and is mostly intended for AI inference applications. This chip, which is now known as the RTX 6000D, will retail for less than the H20 due to its lower production needs and lesser features, according to a May Reuters article. The chip is made to meet restrictions imposed by the U.S. government. It has a memory bandwidth of 1,398 gigabytes per second and uses standard GDDR memory, which is slightly less than the 1.4 terabyte limit set by the April regulations that resulted in the first H20 ban. According to one of the persons, NVIDIA plans to ship small quantities of RTX 6000D to Chinese customers in September. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Kevin, what are you specifically watching right now?
Marley, this is one of the more boring days I've seen in the S&P 500 pretty much all year. Actually, I think this might be the smallest range, or it's got to be in the top 5, smallest range that we've seen from high to low for the S&P 500 all year. So it's been very compressed. If you look at the morning levels that we talked about this morning here, the 6440 level continues to hold as a key area of support. We've hit this level pretty much every single session since about Wednesday of last week, if I'm not mistaken here. So obviously it's been a very critical area. Some buyers have been stepping in, but we have not been able to try to test that upper end of that range, at least for today's session here, while we have lackluster volume as once again, just very compressed action. So kind of going into the close, if we look at the next chart, what are we looking at? We're looking at a 10-point move to the upside or downside here. That's the range that we have for these levels, 6440 to the downside. You want to hold into the close. To the upside, 6450, where we do have over 110,000 contracts traded at that strike at this point in time here. So technically, we are still kind of in this form, somewhat of a downtrend if you're looking at the intraday chart. And if we are going to continue that downtrend here, let's see if some buyers actually do step in 6440. But once again, very compressed day. This is a premium seller's dream right now. If you're buying premium on the call side or even on the put side, a lot of theta is burning on an intraday basis, and it does make it hard for some swing traders that are out there or some day traders in order to try to scalp premium or scalp profits in this type of market here. So that's what we're kind of looking like going into the close.
And with these sort of, very narrow range that we've traded in today, are we also seeing decreased volume as well? Is it a quiet trading day too?
When you're looking at the overall volume for today, the S&P 500 total composite volume, yes, it's coming in a little bit light to start off this week, but you do expect that to kind of ramp up as we get closer and closer to Jackson Hole, and as we get closer and closer to September, which is usually a little bit higher volatility when you're kind of looking at it. So right now it does look a little bit light. That kind of complements the lack of price action for the market as a whole, but you're not seeing a complete breakdown. In fact, I would say the information technology sector has been, let's say, a little bit weak today, at least when you're looking at the semiconductor names like NVIDIA for that matter here. But overall, once again, we're trying to hold up as much as we possibly can. It just seems like we are in a consolidation pattern, and we are, once again, not really trying to find any or not seeing any buyers kind of stepping in. And my apologies, not NVIDIA, but you're looking at some of the other Mag 7 stocks that have been a little bit lackluster outside of NVIDIA moving up today.
And in terms of, you just mentioned, we'll see volatility tick up likely as we get closer to any of the Jackson Hole speeches and any commentary from Jerome Powell. How is the VIX looking? What's volatility like?
Yeah, volatility is still relatively low. This is kind of the problem that you have with low vol, or if you have a VIX that's sitting at a 15 or even a 14.5 level. These are the type of days that coincide with that. So generally, typically this week is where we do see volatility kind of inch up here. We're still holding around that 14.5, that 15 level. But if you're a trader and you like to see really strong trends either to the upside or downside on an intraday basis, you want to see volatility actually creeping up. You don't want to see it really break down from here, because we'll continue to have days like we will have today. And once again, it's easier for us to kind of re-rate volatility higher than it is for volatility to come in lower. Now, tomorrow we will have the last trading day for the VIX August options here. So VIX contracts probably will take the majority of the options volume when you're looking at it on the index level, because you will have kind of this restructuring going into the September VIX options. And that will actually be very interesting, because September, after the quarterly expiration, the third week in September, that actually usually does cause a significant amount of gyration in the market, maybe up a little bit of a pullback, and then we set up for the end of the year rally going into the holidays, if it's looking at Thanksgiving and then also Christmas. So I would say we're probably at the lower end of the range for volatility over maybe the next week or so, and I would expect it to actually kind of re-rate higher here, and hopefully it actually does, so we can get more price action, more definitive price action when it comes to the indexes like the S&P 500 or the NDX.